Sir, you are live now. Please start the session.
Okay. Yes. Good afternoon, everybody. Before I start the session, I would request, I'm thankful to President of our institute, CMA, Bhupati Bhushan Nayak, President of our institute, Vice President, CMA, Srinivasa Prasad Sir, Dr. Ashish Satte, CMA Dr. Ashish Satte, Chairman of Audit Committee, Directorate, and all our participants to this webinar. And I'm thankful to the Directorate of Indirect Taxation Committee for giving me this opportunity to express my thoughts on the subject of corporate governance, corporate guarantee. Okay. One second. Why this slide is not moving, ma'am? Hello. Hello, ma'am.
Sir, what is the issue that you are facing?
This slide is not moving, ma'am.
Sir, what is the issue that you are facing, sir?
Slide is not moving. Presentation
Can
is
you
not
move
moving.
it in your PC? In your PC, it is not moving.
No. One second. Now it's up. Okay. Okay. Sorry. Got it. Okay. Sorry for the technical glitch. So I'm giving my thoughts on the subject of corporate governance, corporate guarantee. Friends, subject of corporate guarantee is relatively very easy for our understanding. But since last 1 year or so, it has faced a lot of litigations or a lot of controversy into the subject. Before I move further, we must understand what is a corporate guarantee. See, corporate guarantee, there are three parties: holding company, associated company, and banking company. The associated company, that is a principal borrower who is requiring funds from the banking company or bank. They seek the credit facility from the bank, and bank in turn they wanted to offer the corporate guarantee. They wanted to give the guarantee. They seek the corporate guarantee from the holding company, which is the surety in the process. So in case of any default occurs from the principal borrower side, holding company, that is surety, should come into picture for protecting the interest of the banking company. That is the entire arrangement of the corporate guarantee in the system. So in this process, the company which is seeking the funds is having bank credit facility in which against which they have to pay interest to the banking company. When holding company offers the gives the corporate guarantee to the associated company, associated or group company, they give guarantee as a backup guarantee for which they are not charging any consideration. See, this rate which I have mentioned is there is no consideration, is a moot point or a crux of the entire issue of the corporate guarantee. So this is the arrangement which we are aware of it. Now we should understand what is the difference between the corporate guarantee and bank guarantee. Generally, people are aware of it, but the important point is that when bank offers the bank guarantee for lending to borrowers, it's a part of the core business. Whereas corporate guarantee is obviously not the part of the corporate core business of the holding company. So there is a big difference between the business aspect of it. When bank offers the bank guarantee, they seek lien on the asset. Whereas corporate guarantee, there is no lien on asset because it is a group arrangement in which a holding company gives the corporate guarantee to the banker in favor of the subsidiary company. Do they charge the issuing bank guarantee? Yes, bank will obviously charge because it is their core business, and because of the core business, they charge the issues corporate bank guarantee charges from the client or the company, and they issue the related party or not. Obviously, bank will not issue to their banking company, but corporate guarantee there will be related party because the holding company and subsidiary are related with each other, and that's why the consideration and related party is the crux of the entire issue of the corporate guarantee. Moving further, now if you see the how the corporate guarantee has panned out in the pre-GST era, that is Indian services regime. Friends, this services provision of in services regime or era, provision of service was the taxable event under the service tax. So as and when service has been provided, so it is to be considered as a taxable event. So what was the definition of the service under the Finance Act 1994? Service is any activity carried out by a person for consideration and includes declared services but shall not. That is a different aspect. So under the previous regime, that is services era, consideration was the critical point. If there is no consideration, there was no service. And that if there is no if consideration is not received, that there will not be considered as a service provided by the service provider to the service recipient. So consideration is the crux of we have to understand that. So when the issue of the corporate guarantee arose started way back in 2011-12, when the positive list of tax regime was introduced in the services era. At the time, field formation were having a lot of issues under the understanding of the corporate guarantee aspect. So they sought the views of the CBSE at the time, how we have to treat. And at the time, because of there was no clarity from the CBSE, CBIC at that time, and field formation, there are a lot of demands were raised amongst the Indian companies, particularly group companies, where to figure out the taxability of the corporate guarantee. So when the demand were raised, see there was no separate head provided under the services SSC service account code. So they issued all notices under the head of banking and other financial services. So in this case, when the notices were issued under the banking and other financial services, a lot of companies were having a lot of issues. And then at last, almost 8-10 issues were there. The last issue, which was settled in Supreme Court in the Commission of CGST versus Edelweiss Finance Services, it was held by the Honorable Supreme Court that corporate guarantee given for subsidiary company without consideration is not liable to services under banking and other financial services. That is, they said, since there is no consideration, it will not be treated as a service first of all, and it will not be considered under the banking and other financial services. So this was the starting point of corporate. According to me, this was the starting point of corporate guarantee in the GST era. It just because started from the pre-GST era because of the services matter. So this was the point of the Edelweiss finance case in which Supreme Court, Honorable Supreme Court, ruled that corporate guarantee is not a service and it will not be fall under the banking and other financial services. Now coming to the when the GST got introduced in July 2017. So if you see, friends, taxable event in the previous regime and this event is totally different. In previous era, pre-GST era, service was levied on the when consideration was required. In GST, we have got supply definition. In addition to that, we also have to read the Schedule 1 of the GST Act, where if any activity is even if not made without consideration, is also treated as a supply of goods or services. So this from starting point, this is starting point of the dispute compared to the service tax era. In addition of you see entry 2 of the Schedule 1 of the CGST Act 2017, the entry speaks that supply of goods or services or both between related person or between distinct person as specified in section 25 when made in the course of furtherance of business. So when any related party, related person has made, had supplied any goods or services, even if without consideration, it will be treated as a supply. So this is the starting point according to me in the GST era for treating or considering rather thinking of corporate guarantee as a supply. Another argument which is going on is that whether corporate guarantee is considered an actionable claim under Section 3 of the Transfer of Property Act, and therefore neither qualify as a supply of goods or nor services under Schedule 3 of the typographically two written here. It is Schedule 3 of the CGST Act. If you see what is the definition of the actionable claim under Transfer of Property Act. Section 3 of the Transfer of Property Act reads actionable claims means any claim to any debt other than debt secured by mortgage of movable property or by hypothecation or pledge of movable property to any beneficial interest in movable property not in the possession either actual or constructive of the claimant. Remember now, which the civil court recognizes of affording ground for relief, whether such debt or beneficial interest to be existence, accurate, conditional, or contingent. That means, if any debt, if it is contingent upon happening of an event, it is called an actionable claim. Now, if you read if you compare this actionable claim definition with corporate guarantee, what is happening? Holding company gives corporate guarantee on behalf of subsidiary to the bank. Now, bank will invoke corporate guarantee only and only when there is a default made by the subsidiary company. So that is contingent upon, that is event occurring. Then only that debt becomes corporate guarantees become the invocable, or rather the holding company is liable to pay the amount to the bank. Only when the subsidiary company, that is a company who has obtained the credit line of credit from the bank. So contingent upon or conditional upon the event, bank is liable to recover the money from the holding company under the corporate guarantee. So one way of looking at the corporate guarantee as an actionable claim or also not. That as we progress further, I will share my thought. Can corporate guarantee be considered as actionable claim rather than the supply under the CGST Act? That argument also can go ahead as and when we move further. Now, when the Edelweiss case was decided in 2023, as I mentioned, then it was a starting point for the entire corporate guarantee dispute under the GST era. 52nd GST Council meeting held in October 2023, there was a long discussion had happened on the aspect of the Edelweiss finance case, based on which field officers or rather the GST department had started issuing notices or to the companies. Based on that, GST Council had a discussion on the subject of how to treat the corporate guarantee under the GST era. So they thought it deemed fit to introduce Rule 2 in Rule 28 for corporate guarantee aspect. Based on that, they issued the circular. We'll go through that circular also. Friends, there are two cases that happened. This Sterlite Power Transmission and Acme Cleantech Solution, that is also under dispute after the circular number 204 issued by the CBIC in October 2023, post this amendment in the Rule 28.2. So this case also will dwell upon. Thereafter, on October 23, Rule 20, Sub Rule 220, in Rule 28, GST Council had further discussion held in June 24 GST Council meeting, and they inserted a proviso that also will go through that. And the circular which has been issued by the GST CBIC in July 2024, 11 July 2024, circular number 225, discussing 6-7 points how the corporate guarantee should be looked at in the various scenarios. That also we'll look into this as well when we progress further. So these are 5 events, according to me, we have to dwell upon in a little more detail for our understanding of this subject, that is GST on corporate guarantee. As I mentioned in October 2023, based on the GST Council recommendation, CBIC inserted sub-rule 2 in Rule 28 of CGST Rules 2023, which reads as under, notwithstanding anything contained in sub-rule 2, that means it is non-absentee clause, that means irrespective of what has happened in sub-rule 1, we have to read the sentences now. And the sub-rule 2 is exclusively for the corporate guarantee. So now I'm reading it further. Notwithstanding anything contained in sub-rule 1, the value of supply of services by a supplier to a recipient who is related person, holding company, subsidiary company, located in India, by way of providing corporate guarantee to any banking company or financial institutions on behalf of said recipient shall be deemed to be 1% of amount of such guarantee offered or actual consideration, whichever is higher. They introduced this sub rule 2 in Rule 28, which talks about Rule 2 is to be applicable for the corporate guarantee matters with effect from 26th October 2023. And how it is to be valued? 1% of the amount of such guarantee or actual consideration, whichever is higher. This was what they introduced in the October 2023 amendment in the CGST rules. Immediately after this insertion of the rules in the sub-rule 2 in Rule 28, CBIC also issued the circular number 204. Gist of the circular is that providing corporate guarantee by holding company for sanction of the credit facilities to a subsidiary company to the bank and financial institution, even made without consideration, is scheduled on transaction, and taxable value of such transaction is determined in Rule 28 of CGST Rules 2. That means they say you have to consider that even if it is made without consideration, it is to be considered as a supply in the CGST Act. Further, this circular states that sub-rule 2 of Rule 28, as per sub-rule 2 of Rule 28, the taxable value of such supply of goods or supply of services, that is corporate guarantee, will be determined as per the provision of sub-rule, irrespective of whether the full ITC is available to the recipient or not. That is 1% of the amount of such guarantee offered per annum or actual consideration, whichever is higher. Basically, this circular talks about the rule which has been given in the sub-rule 2, which has been introduced in the Rule 28. It is nothing more, but they just amplified the discussion or they amplified the rule in a different manner. So this Rule 204, this circular 204 was talks about. Based on these two cases which I want to highlight after the circular, Sterlite Power transmission case. Friends, this is an interesting case. In the case of Sterlite Power transmission case, department issued a summons to the company for collecting the data of the details of the corporate guarantee issued by the company or rather issued by the company from their group companies. So they notice were issued, and then thereafter they filed a petition before the Honorable Delhi High Court. The argument made by the company in the Delhi High Court was that it is very interesting. What they said is that activity of holding company of providing corporate guarantee, activity of holding company of providing corporate guarantee to the subsidiary was not in the nature of supply of services taxable under Section 9 of the CGST Act. Second, their argument is very, very interesting. They said corporate guarantee is in the nature of contingent contract, which is not enforceable till guarantee is enforced by the entity to which guarantee is provided. That is, this is a contingent contract. Contingent contract means upon happening of an event, then only this amount is payable. That is contingent contract. And they also challenge the circular 204 dated 27th October 2023, in which the value of enforcement is not dependent on the value of guarantee. They say 1% is not proper, and that's why what they said. It is only where the guarantee is enforced that value of service may arise. If at all, as such, fixing the value at 1% of the corporate guarantee would put enormous burden on the entity providing corporate guarantee. So they challenge the provision itself. They challenge this supply of providing corporate guarantee is not at all supply. First argument was what they put forward before the Delhi Court was that it is not at all supply. Second, it is contingent contract, and they also challenge this circular 204. The matter was heard last on 8th July 2024, and now next date is 1st October 2024. This is the latest information I'm giving you, friends. Keep track on this event. It will give you a lot of information, and then you get to know many things on the subject of the corporate guarantee. Because I'm sure in the October hearing or whenever the date will be decided or whenever the hearing takes place, this aspect will be dealt by the High Court in greater detail. What has been discussed, what is being thought of all of us. So they are challenging the entire tenet of the Section 9. So that's a very interesting. So this after this introduction, the insertion of this Rule 2 and Rule 28 by the GST, CBIC, the Sterling Power Transmission has challenged the provision of the levy of the GST on corporate guarantee itself. Therefore, there is another case, Acme Cleantech Solutions Private Limited, which is in the Punjab and Haryana High Court. In this case, the same argument what Sterling Power Transmission case was there. They said they also said the same argument, that is activity of holding company of providing corporate guarantee to subsidiary was not in the nature of supply of services under Section 9 of the CGST. That was first argument there. They said it's contingent argument, and they also stated High Court based on the argument put forward by the lawyers of the company. High Court said the effect of the operation of the circular, that is 204, related to item number 2, and an appellate authority was given the free hand to decide the case without being influenced by the clarification. That means they also said that don't consider the circular 204 for deciding the matter. And this matter is also going to be heard next in September, 11 September 2024. So this 1st October and 11 September, friends, remember these dates. Keep track on this. As soon as this move further, it will change the entire gamut of the GST and the corporate guarantee structure, because this matter is, according to me, will not settle at High Court level. It will be challenged in the apex court at any time. So these two cases will decide the turn the table on the GST on the corporate guarantee. So when these two cases happened, then GST Council again, they had a further discussion at the last of GST Council, that is 53rd GST Council meeting held in June 2024, where they inserted one proviso, which is very interesting. So this provision which has been appearing in your scheme, which is appearing here, is in the same provision that valuation will be 1% of the amount of such guarantee offered or actual consideration, whichever is higher. And they inserted another proviso. We said that where the recipient is eligible for full input tax credit, the value declared in the invoice shall be deemed to be the value of the said supply of services. That means that whatever you value, whatever value declared, provided you avail the ITC, there will not be any dispute. So this is a best case scenario where input tax credit is available to the recipient, there will not be any dispute so long as ITC is available. Otherwise, you have to follow the basic rule of 1% of the amount of such guarantee offered or actual consideration, whichever is higher for payment of GST on corporate guarantee. So this was the rule they introduced. Thereafter, based on this rule, as usual, again, when government introduce any new rule or a new insert any provision, they always, issue immediately on the very next day, they issue the circular. So likewise, they also issued the circular 225. There is like various doubts appearing in the minds of the people, again, taxpayers and corporations. So they had, 5, 6 questions they answered it. So question first, answered in this circular 225 dated 11th July 2024. What does it say? Whether Rule 22 will apply to corporate guarantee issued prior to the insertion of Sub Rule 2 on 26 October 2023. Because the issue was there, again, what was the case prior to 26 October? Because the corporate guarantee rule was introduced in the Sub Rule 2 in Rule 28 on this date. So what is the situation prior to that? To which the CBIC thought it fit to answer that supply of services of providing corporate guarantee to any banking company or any financial institution by supply to a related recipient on behalf of the same recipient was taxable even before the insertion of the rule Sub Rule 2 in Rule 28. That means prior to 26/10/2023, we have to think of we have to apply the Sub Rule 1 of Rule 28, that is open market value. And after 26 October 23, we have to apply the rule of the Sub Rule 2, that is 1% of the amount of such corporate guarantee per annum or actual consideration, whichever is higher. This was the first question they answered. That means prior to 26 October 2023, open market value you have to apply. And after 26 2023, you have to apply the 1% of the amount or actual consideration, whichever is high. Now, question which arises, again, if the proviso which we have seen here, this proviso is been introduced with effect from 26 October, which has been introduced. This proviso has been introduced from this date only, 26 October only. So, if open market value has been considered for the transaction prior to 26 October 2023, there will not be dispute because so long as the other person is eligible for full ITC. So should not be any problem. This is pretty clear that prior to 26/2023, open market value subject to availability of ITC. After 26 October 2023, 1% of the amount of such guarantee offered per annum or actual consideration, whichever is higher. This is the first question they answered. Second question they answered is that in case where the corporate guarantee is provided for a particular amount, say 50 crore for our discussion, and whereas loan is only partly available, that is 25 crore, or not at all available by the recipient. What will be the value of such? What will be the value of such corporate guarantee? To which it was answered by the circular is that the activity of supply of services providing corporate guarantee is not linked to the actual disbursal of loan. They say whatever you avail, not avail, partly avail, fully avail, they are not bothered about it. They say it is when you provided for corporate guarantee, that means say your taxable event is started. So it is not linked with actual disbursal of loan. According to me, this is the starting point of dispute. According to me, the dispute will start from this point itself. The service that is provided by corporate guarantor to the guarantee is that taking loan on risk of default. They said services that is provided by guarantee is taking on the risk of default. So it is whole amount, they said. And therefore, they said it is clarified that value of supply of services of providing corporate guarantee will be based on the amount guaranteed. What they say, based on the amount guaranteed, and will not be based on the amount of loan actually disbursed to the recipient of the corporate guarantee. That will say, in this particular case, if holding company has given bank guarantee of say 50 crore to bank for his subsidiary or associated company, and this associated company or subsidiary company has not taken any loan, or rather they have taken only 10% or 15% or not at all any loan, holding company is required to pay GST on the entire amount of 50 crore. What they say, based on the amount guaranteed, will not be based on the loan actually disbursed. So this is sort of a rather the dispute area is going to come. So it is total amount we have to consider that. Guaranteed amount, guaranteed we have to consider. Second question, whether the recipient will be eligible to avail full ITC even before the total loan disbursed. First question is that 50 crore is loan, but not availed or partly availed. So when ITC should be availed? This was the question. So they answered, the recipient of this service of providing corporate guarantee shall be eligible to avail the ITC subject to conditions specified in the Act and rules made thereunder, irrespective of the loan actually disbursed to the recipient and irrespective of the amount of loan actually disbursed. That is, if 50 crore is the corporate guarantee amount, 50% is a tax on which you have to pay, 1% subject to that. Then ITC can be availed irrespective of the loan amount disbursed or not. So entire amount is available as ITC as per the question number 2B. Third question which they asked, or rather they answered, in case of taking over existing loans, since there is merely an assignment of already issued corporate guarantee, whether GST will be applicable again. Suppose one loan has been taken over by another bank. So what is the taxability of that? On which the answer is given by the circular is that since the activity of taking over loan by another banking company or a financial institution does not fall under the providing of corporate guarantee. That is, it is not supply because it is already the event has already taken place, so it will not be taxed twice. That's why it will not be having impact on GST unless there is issue of fresh guarantee or there is a renewal of existing bank existing corporate guarantee. That is when it is loan has been taken over by one banking company to another banking company, it is not a treated. It will not be treated as supply unless because of the fall in amount or short in amount, if existing bank guarantee is required to be renewed or new bank guarantee is required to be given, then it will be considered as a taxable. Otherwise, taking over of existing loan doesn't require fresh tax or fresh payment of tax. Another question is that where corporate guarantee is provided by more than one entity or co-guarantor, what is the amount of on which GST is payable by each co-guarantor? To which they have answered, in such cases, the value of such services of providing corporate guarantee shall depends on actual consideration paid or payable by the co-guarantors. If the said amount of total consideration is higher than 1% of the amount of such guarantee offered, the sum of the actual consideration shall be the value of corporate guarantee. If the if the actual consideration is less than 1% of the amount of such guarantee offered, then GST shall be payable by each co-guarantor proportionately. They said, they're given the example. Suppose there are two guarantors, co-guarantors, guarantor A and guarantor B, who is going to provide corporate guarantee to a banking company on behalf of recipient for say recipient C for rupees 1 crore. Then A and B shall be liable to pay GST at the rate of half, that is 1% of half of the 1%, that is 0.5% of the amount guaranteed. Hence, in this case, A and B providing corporate guarantee jointly to a banking company shall pay to the recipient of for rupees 1 crore. Suppose A provides guarantee for 60% of the guaranteed amount, and B provides guarantee for the balance amount, that is 40% of the guaranteed amount. Then GST shall be payable by A and B proportional to their risk taken there. That is 0.6% and 0.4% of the guarantee amount. That is, A shall pay GST of 1% of the amount, that is 60 lakh, 1% to 60 lakh, and B will pay 1% of the amount of 40 lakhs, because that proportion is 60-40. So it will be based on the amount of the guarantee given by them proportionately. Co-guarantor will pay the GST of 1% on the proportionate amount what they were guaranteed to the guaranteed in the entire corporate guarantee clause. So this is a sort of a okay. There is no big dispute here because proportion is clear and amount is also clear. Whether intra-group corporate guarantee, where in intra-group corporate guarantee, whether the GST payable under reverse charge mechanism, to which there will answer is no. GST is always paid to be on forward charge mechanism only. However, in cases where the corporate guarantee is provided by overseas entity, like multinational company having their branches and companies are located outside India, then GST will be payable under the reverse charge mechanism by the recipient of the service, that is related entity in India. That means if multinational company is seeking loan in India, having that associated company in India, and the banking company is seeking the corporate guarantee from the parent company, which is outside India, then in that case, obviously, the Indian company will have to pay tax under the reverse charge mechanism because that foreign entity, provider of corporate guarantee is located outside India. So in this case, it is a reverse charge mechanism. But even otherwise, if this is not the case, then corporate guarantees to be provided is to be paid under the forward charge mechanism. It is very clear. Whether whether the Indian company providing corporate guarantee to outsider or not, that is a sixth question. Whether the valuation of in terms of rule 20 sub rule 2 or CGS rules will apply to the exporter of service. So to this they said no, because obviously because that amount of corporate guarantee given by the Indian company to their subsidiary located outside India is out of the taxable territory. So obviously GST will not be applicable on that export of services. Next question is whether GST of 1% on the corporate guarantee offered is to be paid on one time or on yearly basis or monthly basis. What is the duration? How we have to pay GST on the at 1%? And when corporate guarantee is issued for a fixed term of say 5 years or 10 years, how it is to be paid? This is very interesting question. So what they say is that it is 1% of GST or actual consideration whichever is higher is to be payable on yearly basis. It is yearly basis. That is 1% of the amount of such guarantee offered multiplied by number of years for which guarantee is offered or actual consideration whichever is higher. So when the corporate guarantee is provided for less than a year or say 6 months, then that amount will be calculated on the proportion basis. That is 6 divided by 12 multiplied by 1. And when the corporate guarantee is provided for say 6 or 7 years, then it will be treated as it will be given in the number of years. Like if suppose for example corporate guarantee issued for a period of say 1 year. For example, corporate guarantee is issued for 1 year and renewed 5 times for a period of 1 year each. Then the tax amount would be payable 1% of the amount of this such guarantee offered or actual consideration whichever is higher on the amount on the issue of such guarantee in the first year itself, as well as every renewal happening in the next 4 years. So 1%, 1% per annum for 5 times 5%. However, if corporate guarantee is issued for a period of 5 years, then value of such guarantee is to be calculated at 1% per year of the amount of the such guarantee offered, the actual consideration whichever is higher. That is the value of corporate guarantee provided will be effectively 5% of the amount guaranteed or the actual consideration whichever is higher. Therefore, GST will be payable on such guaranteed amount would be 5% of the 5% of the actual consideration whichever is higher. So this is the sort of this question according to me is a sort of not a good this thing, because if guarantee is given for 10 years, then again the company will have to pay the tax or will have to pay the amount at every year, that is for 10 years 10%. So big this thing. And again the question which arises is again when the holding company offers the gives the bank guarantee to the subsidiary company, the subsidiary cannot ask holding company to do this onerous requirement of payment of GST on every year basis. That is also sort of a That's also sort of a bone of contention because first of all, you are seeking the first of all the subsidiary company seeking the favor from the holding company and also asking them to pay 1% tax every year. That is sort of a big dumper on the holding company to comply with this provision. So again, according to me, here government should have thought of making it a little bit more industry friendly because yearly payment of 1% is a sort of a non-starter or it will not be going well into the industry and the professions. So again, if you are analyzing the circular, that what is the time of supply in case of supply of services provided to corporate guarantee or to any banking company. So serial 6 of the circular has answered this question that when corporate guarantee is provided for a specific period, specific period of time, then time of supply will be the date on which it is provided. Therefore, GST is payable only once. It is when it is provided. And when the corporate guarantee is provided for fixed period and it is renewed upon expiry of the fixed period until the loan is obligated as fulfilled, time of supply will be the date on which it is provided and also each time it is renewed. Therefore, will be payable as and when the renewal happens. So time of supply is linked with the period of the corporate guarantee. What is the service under the what is the service provided? This is a question which has been discussed in the industry professions. Whether there is really service under the corporate guarantee, and what is where the services where the services exactly happen in the corporate guarantee subject. Whether it is on the signing of the agreement or whether the amount borrowed by the company from the bank under the agreement or at the time of default payment, and which end this service has breached, where the services has been, whether the and signing for agreement, borrowing amount, or when default is made. So that is also not clear in the entire both the circulars. So this is also going to be tested when the matter will be heard at the both high court matters which I mentioned some time back. There is also argument that whether the corporate guarantee is a shareholders activity or provision of services, because it is says that provision of corporate guarantee supply of services for providing deemed value. The question is whether any activity has actually performed by the group members while giving the guarantee to banking company is not being answered by this circular. So whether corporate governance should prima facie treat as shareholders activity or as only or as a shareholder, as investors in the another company. So question is that when the holding company has provided corporate guarantee to the bank on behalf of the subsidiary company because they are shareholder in the subsidiary company in India, because of their shareholders activity, they are required to do the this activity of providing corporate guarantee. So that angle also to be seen, or other that angle will also be legally scrutinized by the High Court as and when the things will move in the High Court, because this is not a provision of service, and then it is provision of service. At which angle it is provision of service? So entire structure of the discussion of the corporate guarantee will be tested in this on the argument that there is strong argument. It can be put forward by the lawyers of the both the companies that this is a shareholders activity and not it is not a provision of service, because they being a holding company, they are holding shares in the subsidiary company in India, and because of that they are providing corporate guarantee to the bank for in favor of the subsidiary company in India. So this should not at all be a provision of service. This is also argument which going around in the professional circles and in industry. Interesting aspect is that if you see if you read the provision, see here it is mentioned. Here it is mentioned. Corporate guarantee 1% of the amount of guarantee offered. Here also it is mentioned that when the insured guarantee offered, what they say that what is the valuation of the corporate guarantee in the rule sub-rule 2 of Rule 28, 1% of the amount of such guarantee offered. 1% of the amount of such guarantee offered. So what is the guarantee offered? What is the guarantee of offered? They should be specifically clear because it is a taxable event. So they should be mentioned that in the rule 2, it is stated that 1% of the 1% of the amount of such guarantee offered per annum or actual consideration whichever is higher. Now, what is the meaning of corporate guarantee? What is the meaning of guarantee offered is nowhere mentioned in the act nor in the rules. So they just again guarantee offered. They have considered it is a sort of a activity, and then again which GST to be payable. So question is what should be constitute what should constitute guarantee offered? Whether the term guarantee offered should include a base amount of guarantee, that is suppose 500 crore given is a base amount of guarantee, or should that 500 crore includes interest, fees, other charges, expenses, etc. That has not been specified in the term guarantee offered in sub-rule 2 of Rule 28. This is very important. We have to understand, because while I was reading, I was also searching that guarantee amount. You can see in the Transfer Property Act, and then again where it is given. But guarantee offered, which has been stated in the rule sub-rule 2 of Rule 28, nowhere it is mentioned that what is guarantee offered. So what should be included in the guarantee offered? Should include the interest, fees, other charges, expenses. Nowhere clear. And then therefore it is challenging to calculate the uncapped continuing guarantee. This to be seen from the express terms of the documentation and contract of the guarantee. So maybe some the department officer may even consider if the guarantee amount is 500 crore, and they also mentioned that in apart from 500 crore or whatever amount of corporate guarantee offered, holding company is also liable to pay interest and fees and other charges. Then whether it will be included or not, and then again some intelligent department officer may even think of consider this as a part of the guarantee offered. This is also not clear. So in short, when they have not specifically elucidated in the rules what is guarantee offered, this is bound to create problem, according to me, or that it will bound to create legal bone of contention among the industry and the circle. So this is what I have to say. I'm just leaving the floor open for the question answer. If you have got any questions to answer, I will try to answer at my own best way. Any question? There are no question in the chat box also. Let me check. Anonymous, somebody is asked what is justification of corporate guarantee. Again, I also have the same answer. What is justification of corporate guarantee? Because government thought it fit to introduce corporate guarantee under the rule 2. I also have the same argument. What is the justification of the corporate guarantee? And again, as I mentioned in the uh, presentation, in these two cases, if you read, the point is right. Again, what justification for corporate guarantee? These two cases will decide the entire fate of the corporate guarantee. State Sterlite Power and Economic Clean Tech, the same thing will they are applying. There also it is contingent contract. This contingent contract means the contract is there upon happening of a certain event. So that doesn't mean that again GST will be applicable, because I have given guarantee that doesn't reach the supply event, and justification is not there. I also have the same kind of thinking, but GST Council deem it fit to discuss at 2 times, and then they come out with the circulars, and they issue the circular for the benefit of the industry. But again, my experience is that when the CBS issued the circular, it rather than solving the problem, they complicate the problem. So whatever you are discussing, 3-4 questions, again, how the circular is going to change the entire thing of the guarantee offered, whether the yearly basis or not, because that you have to see. And again, the argument of shareholders activities also come into play. So, according to in general, I will say it is not a government should, rather CBSE or the GST Council should have given well thought of it to provide the subject more clarity on the subject of the corporate guarantee. Second thing is that the corporate guarantee subject per se is not rather new. Only thing that in the services era, it was not because of it was there is no consideration. It was not taxable under the services era. But in this era, because of the schedule one activity, this is there. They in the last GST Council meeting, they thought it fit to introduce the proviso with the rather that is a caveat. Rather, they said that so long as if you avail the ITC, there will not be dispute. But what happened to the industry? Those who are not into GST, the power sector, and then again the big industry, those who are having the inverted duty structure or those who are having import tax credit, they cannot avail import tax credit. This liquor industry, power industry, they will be having huge accumulation of import tax credit. Suppose power sector is having in India and their holding company is given the huge bank guarantee for to the bank on behalf of their subsidiary. And the power company is not into the GST, so there will be huge accumulation of input tax credit. So justifications as such, according to me, is not there because it doesn't give level playing field to the companies or the industry, those who are not into the GST net or the input tax credit net. So providing proviso by way of the in the in the rule two doesn't serve the purpose. They deem it fit that so long as we have put the proviso, that's why if you are available, you can avail the input tax credit. So this issue is solved. That is not going to happen. That valuation itself is a challenging task. Shareholders activity is also challenging task. Third is that how it is to be calculated. It is a cash component. Every year, if holding company has given bank guarantee for say 6 years, every year 1%, 6 years 6%. So it's a big task, big amount. Though other person is required to avail the input as credit. And what about the other industries like the power sector or other companies, those who are not into GST, will it not be a cost to them? So according to me, this issue is not going to raise so easily. And then again, we have to be very practically answering this. There's somebody has written that it is a tax terrorism by government. Sorry, I will not use that word. Sorry, sir, I will not use that word, tax terrorism. But government always think, again, whether tax is required to be paid, they bring all such provisions. But at times we have to see the business convenience, business modalities. It should not bother and it should not end up the, again, dispute, because every dispute has got its own cost. If people are approaching small persons, or big company can approach high court, or they can afford to litigation to the apex court, Supreme Court. What happens to the company, those who cannot afford to have this kind of big litigation appetite? Yeah, I will share this PP to our institute. Please, uh, please clarify whether 1% GST or corporate guarantee should be understood as 5%. Yes, 5% CGST, 5% SGST. Yes. Provided it is CGST, it is intrastate transaction. If it is GST transaction, 1% of this. If CGST is GST apply for holding company or any related form, even partnership form. Yes. Question is that Mr. Bhandari has asked: is corporate guarantee GST applicable for holding company or any related for even if it is partnership form and recipient is private company? It is applicable to everybody, so long as they are taxable person. When it is just somebody asked the question, when it is just a contingent contract, how can government claim tax on this when there is no consideration at all? I'm not talking legal. Talking about a legal point of view. Morally, the government has no right to tax. It's simply, sir, this Mr. P has written that will be tested in the court of law in the near future. Mr. Can you tell a practical solution where corporate is guarantee brought into existence? Practical situations when corporate guarantee is issued, it will be tested. I'll tell you again, since this question is arise, few days before after this, it's some 3 4 months before. Uh, Now the GST department not only look into the transition because of the nature of the transition, they always go beyond the trial balance and balance sheet. They always see the vouchers. And when particularly company is a multinational company or group company, they always seek the agreement. And when the agreement is talks about any kind of such arrangement where corporate guarantee is required to be given by the holding company, they always sought the clarification or they seek the documentation. So practical solution is not there, but when if it is given, then again you have to pay the tax. How open market value is established? Open market value is to be established. There is no open market value. Open market value is depending on the two related party or two transaction between the two parties. Whatever you can put 5 rupees, 10 rupees, or whatever amount because it is depending on the that transaction between the two parties. Mr. Farooq Bhuri has asked, is a corporate guarantee issued by corporate to one of its division within company without consideration is GST as applicable? Yes, it is applicable. Is GST on corporate governance prospective or retrospective? GST, as if you can see that Circular 204 has said, from 26th October 2023, Sub-Rule 2 has been introduced. Prior to that, GST, they mentioned in that circular also, GST was there on the corporate guarantee, but it was on the Sub-Rule 2, that was on open market value. From from 26th October 2023, after introduction of the sub-rule 2 and rule 28, this is be applicable on 1% of the 1% of the corporate guarantee or value or actual consideration, whichever is higher. Mr. Sanket Joshi is asked on what basis consideration is decided between corporate guarantee given. This consideration is to be decided. If it is not that open market value, or you can charge whatever amount deemed fit between the two parties, surety and the borrower. How invoice is to be raised? Invoice is to be raised normal, not we generally prepare the invoice. Sterlite case, which has been mentioned by Mr. Prasad, I mentioned that Sterlite case is to be decided in that matter is coming to board in the next month. So please keep a tab on that. It is only corporate guarantee. Mr. Ramashankar Mishra has asked, it is only on corporate guarantee or any other type of guarantee? It is only a corporate guarantee. See, again, our subject matter of discussion is on the corporate guarantee, but personal guarantee, since you asked the question, the personal guarantee is relatively clear. If personal guarantee is given by the director of the board on behalf of the company to the bank, see, first circular, that is circular 204, is very much clear that RBI circular has given mandate to the banking companies that they should not insist for personal guarantee from the banks. And if it is personal guarantee is given, it should not be a sort of their practice. And whenever the personal guarantee given by the director on behalf of the company to the bank, it should be properly audited by the auditor of the bank. So personal guarantee is out of the context because the circular 204, and then only left is corporate guarantee. So it is only corporate guarantee, Mr. Ramashekar Mishra. Hope I have answered all question. Any other question I'm ready to answer that. Priyanka ma'am, is there any question?
Yes, sir.
Is there any question? I have answered whatever questions were there in the chat box.
Yes, sir, please.
So there is no question. I have answered every last question also. Can we conclude the session now, ma'am?
Yes, sir, we can end the session now, sir.
Thank you very much. Thank you for all participants for I tried to answer whatever questions I have got with me. And ma'am, I will share you the my PPT to your this thing. You can distribute to the members whoever want. Thank you, ma'am.
Thank you, sir.
Thank you.
Yes.